Good morning, YouTube. This is my second chance at trying to make this video. The first time I made it, my headphones were plugged in and it was trying to capture the sound off that little bitty microphone and it didn't work. So I did 30 minutes for nothing. But anyway, maybe it'll be a little smoother this time since I had a practice go. The reason I'm doing this is I've been following a bunch of conversation on Twitter, and I've seen people kind of going back and forth about DR, IDR, what it is, what it isn't. I've seen a lot of people bashing it for just being an opening range breakout strategy. So I thought I'd make a video to kind of just clarify that and kind of give you a little bit more insight on exactly what this is. So who am I? I'm a new trader. I started back in July of last year. So let me show you real quick my beginning of my journey. So I started last July. I started on Robinhood, just messing around with some Ethereum, different kinds of crypto. Then I got into some stocks and just playing around with some different things. But on my 18th trade, I made almost $8,000 on the Bed Bath & Beyond squeeze, or whatever it was last year. I don't know if you guys remember, but there was a huge move. There was on Stock Twits, there was like thousands of people. The traffic was just crazy talking about this stock was going to explode. So the next day I got in and, pumped a bunch of money into it and just hit buy and didn't know anything. Watched it go up, up, up. I saw the profit. The P&L was over 10,000 at one point. And, I'm high-fiving my kid. We're having a good time. I guess I kept thinking it would just go on up forever and I would close and buy a new house. I wasn't really sure what to expect. Anyway, then it started dropping and, I got out, obviously, and made about $8,000. And then the next day or so, I gave it all back. I had no clue how this works. I thought it would just be, go back in, do the same thing, make another $7,000. I didn't know. I mean, it was literally, I hadn't even made 20 trades yet, and I somehow got pulled into that. So that was definitely an interesting way to get started in my career, if you want to call it that. But so I was playing with about $25,000, so I was able to make, a decent sized buy on this. And, time went on, I just kept learning and doing different things, started getting into the ETFs, and, a buddy of mine was in DraftKings, so I bought a bunch of DraftKings and was just scalping and day trading, what have you. And in December or so, I started using one of the journaling software. So I moved over to TraderSync. So anyway, but just to show, kind of where I started, I literally do not have a year trading yet. And I say that because as of yesterday now, I'm a funded trader. I've got a 50K account with Trade Day, which, I see people talking about how hard this is, and it is hard, no doubt about it, but it's surprising that, within less than a year, to me, it's amazing that I've been able to accomplish this. So I'm going to sign into my account, take it to my dashboard, and show, here was my profit target, here's my account balance. I smashed it. What happened was I had one day that was too good. I did it within 10 days or so, but I had a day that was over $1,000, and it caused me to have an inconsistent day, which for those of you who like to use Apex or whatever, if you have a single day that adds up to over 30% of your total, you have to keep trading until the amount kind of buffers that out. So that's what I had to do. I had to keep going. I needed $800 something as of on Friday, and Friday I went and did exactly what I needed to pass the challenge. I made $800 on this account on Friday using the DR Lens database and the DR IDR strategy. So I'm going to log into TradeAbate. So 53,408.92, that was my total. I'm going to log into my TradeAbate account. Go to my SIM account. Here's my total, 53,408.92. I'm going to show you my statistics. I started it on the 6th. Custom range. 28, go. Okay. Same total, 34,08.92. So I had 63% winning trades. My average winner was like $150. And I had one day where I had a huge loss and a huge win. So it kind of balanced out. But this is sort of the It's fairly consistent. I mean, daily, had a couple days that were high, a couple days that were low, but for the most part, my P&L stayed in the positive. I don't think I utilized any drawdown hardly. I think maybe on the first day I went short a little bit, and then after that I was able to consistently just motor right through this thing. I'm not going to say it was easy, but I only had to do one reset, and that was because I just had no idea how this stuff works, and I, trial and error, figured it out. And I guess the point is that strategy made this possible for me. And this is not just an opening range breakout strategy. There's so much more involved here that when I see people say that, it makes me grind my teeth. Okay, so M7 came out, and his name is the Master. It comes from a German, kind of a play on words with his grandfather, who was a Meister, and it translates to that. I just call him M7. He came out and just sort of gave us this idea about the DR-IDR range that's created in the first hour. Yeah, you can use that as sort of looking at it, looks like just an opening range breakout, but what you're really doing is you're able to know that once one side of this box is confirmed, you have a very high chance that the other side, either the high or the low, is already in for the day. In other words, if it confirms long, then the low is already in. And you can use that in your decision making. It's very, very powerful to know that. So what we do is, if we have that knowledge on the days where it confirms and then it dips back down here, well, I know with 80 to 90% chance that it's not going to close below this. So think about that for a minute. If price is down here and there's an 80 to 90% chance that it's not going to go any farther this way, what do? Well, you get in. You get in long, and you put your stop loss like 2 or 3 ticks below the DR, the low DR here. It works amazing. It's called the retirement setup. And you want to talk about low risk, high reward, 2 or 3 ticks below this, and then it rides all the way up. It'll go just ridiculous risk reward. When you see people talking about they made 15, 20 RR with this strategy, that's not a big deal. That's not hard at all. When you've got a stop loss that's 6 ticks because it came down and tapped the IDR, the low IDR, and you go a couple ticks below the DR low, no problem. It might wick through, so you got to take that into consideration. 3 ticks for me usually works great. So and it's a lot more than just that. We have the database, the DR Lens database, that lets us use 20 years worth of information that's tracked the movements of these assets, and it gives you an ability to basically predict or know about where you need to get in on retracements, and gives you a really good idea of how far to expect it to extend to set your targets. So let's get into that a little bit. What is DR Lens? This is DR Lens. And what I'm going to do is I'm just going to take yesterday and I'm going to plot what DR Lens says should happen. Okay, and to show that this works, I'm going to pull up my Twitter from yesterday. I actually took trades yesterday and based on that. So here's yesterday, right? And if you look at it, you can tell that's the same day, right? Same day. And I was happy that I passed my challenge yesterday, and I also took this on my live account and made a few $100 just using this high probability timing for the max extension to take place in the last 15 minutes of the session. So I caught all this move right here. So that was yesterday. Okay, so using DR Lens, what we do is once we get a confirmation here and we close above the DR or below, then we open up DR Lens. And there's a video of this on M7's YouTube that goes a lot more in depth that you can look at if you want to. Okay, so here's the instruments that it's populated with. So we've got a nice grouping of futures and stuff in here. I traded the E-mini Here's the 3 sessions: Asia, overnight, or London, and then regular IDR or New York. So I took that. We filter it by the day. Yesterday was Friday. And then if you look at the time of the confirmation happened at 12:05. So that gets plugged in right here. Confirmation time of day goes in this bucket right here. Right? It was a true confirmation, long. We start with true because it's true until it's false, and the percentages are so high. So you got an 82% chance on this day when it confirms that it's going to be a true. That means it's not going to turn around and go back through the bottom. So that's a powerful tool that gives you a bias with a high percentage that even ICT admits some days is, it's 50-50 some days. You just, you do your best, you use your high time frame analysis, but the market does what the market does. So here we have 20 years tracking those movements that tells you what it's done in the past and what the percentage is. That's statistical precision that you don't get from any other way. Okay, and I've learned to trust this. This is highly accurate. Okay, so then what? All right, got your chart. So we would plug in these times for retracements and extensions in these areas. So let's go to, first thing we'll do is I'm going to pull up the standard deviation lines and retrace grid and show areas of time. Okay, so now that populates. I already plugged in everything from the database. So I'm going to show you where this information comes from. So median standard deviation extension, this is how far it's went once it confirmed either long or short in standard deviation measurements from that DR line. So the highest probability is the 6 to 7, 0.6, 0.7 standard deviation. And I always also look at the mean standard deviation, up or down. So 0.5 is kind of where I start. This is my low-hanging fruit. If it's higher than 0.5, I start with 0.5. That's where I'm going to target. So I have this plugged in right here at 0.5 to 0.6, and that information went in extension right here, 0.5 to 0.6. That's my extension. And then for retracements, the highest probability is from minus 0.1 to 0.2, and then there was another possible after that 0.7 to 0.8 negative also, which is inside the range. So I mark out 0.1 to 0.2 and it makes this box. I do 0.7 to 0.8 and it makes this box, and that corresponds to these standard deviations within the IDR range. Okay, so this is where I'm expecting it to possibly retrace to as far as area. And then time, we all know time and price work together. So I'm expecting my retracement, max retracement back into the range to be, 12, 15, 12:30, 12:45. So about a 30-minute window from 12:15 to 12:45, somewhere in this range, or around 14:45. So again, using that information, that gets plugged into the times. So here's my retracement window, gives me this box. Here's my other retracement window, gives me this box. And then also, because we're talking about retracements, I have 2 areas for retracements, so it puts these down here as well. So in most cases, the second cluster isn't as far down. Having this knowledge allows you to say, okay, if it touches here, most likely it doesn't go below it, so you put your stop loss a couple ticks below the box. That's what we're taught to do. If it does go through and you get stopped out, you look for your next box. That's just what the data says has happened over the last 20 years. You're most likely going to retrace to here, but there's a little lower probability that it'll dip down here. So maybe that, I don't know, this is before the confirmation, but still you can see that it does have a tendency to want to dip down this far. It's definitely not unheard of. So there. So at 12:05, after this confirmation is made, we go in and we populate the chart using the information from the database. Okay, pretty straightforward. And then, that's hours in advance of, where we expect price to actually go or retrace to. I mean, this isn't that long. It didn't take long at all to retrace and get into this trade. But say it didn't dip down there just yet. Okay. Here's the median retracement time and the median extension time. This is sort of the averages. So on average, the max retracement takes place at this time. So even if this didn't happen, we would have been looking for something around this time for it to start coming down into our retracement area that we have populated using the DR lens information. And then this would have been another opportunity to get into the trade. But even if you got in here, you didn't get stopped out here because your stop loss is down here. And some people will go to break even up here, so this might have been a break even trade. It just depends on where you took it. Everybody has a little different way to apply this. I'm pretty aggressive, so if I get stopped out, I'm getting back in, which I did yesterday, and it paid off big time. Okay, so as you can see, there's no way for me to really manufacture this. I'm pulling my information from a database. It's static. I mean, it's not changing right now. There's no way I don't have the ability to program this and go in and make it say this stuff. I mean, this is what we have access to. It's drlens, m7.com. This is his database, okay? And this is available with the lowest tiered subscription, which is like $35 a month. You get this, you get the drive indicator, you get Discord access, you get, just tons of stuff. The higher tier subscriptions give you just basically more access to him. There's all the way up to one-on-one, instructions, and there's some rules-based training called Frame. So, depending on how deep you want to get into it, but even at the most basic, the tools are available for the lowest tier subscription. So, definitely worth it. What else? Let's see. So yeah, if you think this is just opening range breakout, that's not what it is. There's a lot more to it, and the tools, this indicator here. There's some other stuff. This is sort of some secret sauce that's going on that we're just getting access to. So these ranges are plotted using the IDR ranges from previous sessions. So when a previous session is created, we get these clusters, and they plot out, and they're kind of like opening gaps, but they're definitely sensitive. Price is sensitive to it. So we're starting to learn how to incorporate this into some weekly strategies, I guess, that almost look like your, and it's hard to explain. I don't want to show it because some of this, what he's getting into now is not really available for free on YouTube yet. So until he does that, I don't want to go give away the goose. But let's just say that we're getting more than our money's worth for being involved in the academy. So yeah, that's it. That's the strategy. This goes on every day. We use it for all the different instruments, all the different sessions. We can plot Asia, ODR, and New York. So 3 times a day. So when people are saying, they made 15R, 20R, yeah, that's not really a big deal. These moves, if you catch this from here to here, if you get in right here, up to here, that's 22 points. That's an easy trade using this, 22 points. That's like stress-free. You got in, very little drawdown, break even pretty early, never comes back, and just goes up and hits your target. That's what we experience almost on a daily basis. So if you're seeing people say they're making 10, 15, 20R in a day, yeah, no problem. A couple tick stop loss, or, a couple of points even. That's a 10R trade right here. And over here, guess what? This was ODR. Guess who got in right here? with their retracement and rode this puppy who knows how far with, you know, whatever. You know, don't doubt what they're saying, and don't just dismiss it and write it off because it's something you don't know or haven't heard about, or someone else says it's bunk or something like that. This stuff, this is the real deal. This is quantum level professional training. This is like institutional stuff. And he's got it. If you listen to this guy for 5 minutes, you know he knows what he's talking about, and he's taking us into some stuff that's, you know, way beyond anything. You know, and I say that, you know, take it with a grain of salt. I've only been doing this 9 months or so, but I've spent probably thousands of hours. I've been on every YouTube site. Anybody that's prominent, I've checked them out. I've been, you know, the books, the psychology, Mark Douglas. I've done the work, and I can say I haven't seen anything yet that approaches this. That doesn't say that the other strategies aren't profitable. They're wildly profitable. ICT, you know, supply and demand, things like that. You can make a lot of money on that. I'm not going to diss any of that. I'm just saying that this is also the real deal, and it's different. It's a little different level, and you just have to kind of experience it to know what I'm talking about. But being able to know ahead of time with a very high probability where price is going to come back to and where it's going to extend to, that makes trading a lot less stressful, makes it a lot easier, makes it a lot easier for you to size up and put money behind it without a lot of fear, because you see this playing out day after day after day. So I hope this is helpful. I've got some other videos up there on YouTube that show me doing this live and go into some, you know, deeper explanation on using the tools. So if you found this interesting, you might want to check that out too. And maybe I'll see you in the academy. So anyway, thanks. Have a great day.